Welcome to the Crypto Prism channel. Before we officially move into today's candlestick analysis, today we'll analyze the current Bitcoin market from several different news and data perspectives to determine whether going long or short has more advantage right now. The first piece of news is that the Bank of Japan will announce its interest rate policy around noon on Friday. The market generally expects them to raise the interest rate to 0.758%. So what does this rate hike affect? Of course, it has a major impact on Bitcoin because in global financial markets, the cheapest place to borrow money is from the Bank of Japan, borrowing yen and converting it into US dollars. To invest around the world, including Bitcoin, everyone should not forget the major crash on August 4th, 2024. That crash happened after the Bank of Japan initiated its rate hiking cycle, and shortly afterward, Bitcoin dropped more than 20,000 points in a single day. These events are clearly not bullish for Bitcoin. We can also look at the impact of previous Japanese rate hikes on Bitcoin. In March 2024, Bitcoin fell by about 23%. In July 2024, it dropped by around 25%. After the rate hike in January 2025, Bitcoin fell by more than 30%. So how much will Bitcoin drop this time? No one knows, but based on historical patterns, this means the current rate hike in Japan is likely bearish for Bitcoin over the next 1 to 2 months. Now let's return to technical analysis. At present, Bitcoin broke below the trend line on Monday. If after breaking the trend line, the pullback fails to create a new high, and then breaks below the 85,000 low again, this upward trend has already ended. Bitcoin would then likely go on to test the previous low around 80,700. If this level does not form a false breakdown followed by a rebound, and to be honest, I don't really expect a false breakdown rebound here. Any rebound should be right side confirmation, not left side guessing. So I believe a more likely scenario is this. The price may drop into the 70,000 to 74,000 range. Why that area? Because technically, this price zone was the top of a consolidation range and previous support level. This area also makes it convenient for market makers to push the price down and then form a potential left shoulder head, right shoulder structure. Therefore, I believe that if Bitcoin crashes sharply and drops to around 74,000, there should be a rebound from that area. At this point, everyone must be mentally prepared. What if Bitcoin really drops? You must think it through in advance. It doesn't mean you go all in long right now without considering stop losses, especially for those trading futures. Many people didn't fail because they missed the bottom, but because they misused leverage. As a result, the price dipped slightly deeper. Their positions got liquidated, and then the bull market returned. This is a very common market scenario. So what should we pay attention to right now? You need to watch the MA50 and MA200. These are indicators institutions look at, used to determine whether the market is in a bull or bear phase. At the moment, there's no ambiguity. The market has already entered a downtrend, also known as a bear market from an institutional perspective. In the previous 2 bull markets, when this death cross appeared, Bitcoin had already formed a bottom. But this time, after the death cross appeared, Bitcoin fell from 92,000 to just above 80,000. So based on this indicator, Bitcoin still has room to move lower. If there is a rebound. I expect the moment price touches the MA50 to be a point of strong rejection. Some people are hoping Bitcoin can break above the moving average, reach 98,000, and then short from there. I don't think that probability is 0, but it is very small because the moving average hasn't been broken yet, and the key institutional resistance zone is actually around 94,500. This is something worth considering from a medium to long-term perspective. Now let's return to the short-term view. What should we pay attention to? We can see that Bitcoin broke the trend line with a large bearish candle and accompanying volume. In this situation, When price breaks the trend line and pulls back toward it, this is not a place to chase longs, but rather an area to look for bearish trade opportunities. At present, Bitcoin is trading around 89,000, which is a very strong institutional zone. There was a false breakdown and rebound here before, but it was ultimately rejected and broke down through the trend line again. So unless something unexpected happens, this area will serve as a defensive zone for short sellers. If you're considering shorting Bitcoin near the trend line, my suggestion is to place your invalidation or stop loss around 91,000. One more reminder, all these key levels should be marked out in advance because previous lows can become rebound points. That's all for today's episode. If you haven't subscribed to my channel yet, you're welcome to subscribe. See you in the next episode.